Hello, ladies and gentlemen. Greg Michalowski from ForexLive.com. This is a Forex Quick Look. I'm going to take a look at the dollar versus Canada. Today's date is February 12th. Kickstart your week in this currency pair by taking a look at this technical view. So let's get started. Looking at the hourly chart, the price of the dollar versus Canada went down sharply on Friday. Early in the session, we had a little bit stronger than expected Canada GDP data. We also, or not GDP, employment data. We also saw the US CPI revisions, and that initially sent the price to the downside, the dollar versus Canada, or the Canadian dollar higher. But we ran into support here against this swing area and also ahead of the 38.2% retracement of the move up from this low going back to December to the high price that we saw here in the month of February. The low came in at 134.03 and the low price came in around the 12 or so level before rotating back to the upside. And that move to the upside retraced the full move to the downside, moved up toward some key resistance up here against the 200-day moving average and this falling 100-hour moving average. That's a blue line in the chart. And we found willing sellers against that level. And we moved down to another swing area, another moving average area defined by the 100-bar moving average in the 4-hour chart and the 200-hour moving average. Those are these two moving average lines right here, the blue and green lines, and the price settled in just above those levels. And trading here today, we saw a very quiet price action in the Australian or the Asian session with up and down price action above and below those two moving averages on the downside. And then the buyers started to take control, pushing the price above the 100-hour moving average in the process in the early North American session. But we did find willing sellers against a 200-day moving average, and we've since rotated to the downside. We are back below these the 100-hour and the 100-bar moving average on the 4-hour chart and the 200-hour moving average. That tilts the bias more to the downside, and the sellers are trying to make a play with a test of the previous low for the day. As long as the price remains below these two moving averages right here, that is more bearish for this pair, and we could look or expect a further downside momentum in this price, perhaps even down towards retest of this swing area. 38.2% retracement, 200-bar moving average on the 4-hour chart. All that comes in between the 133.98 and 134.14. If the price were to move back above these two moving averages, then we look toward the higher moving averages once again. And if we get above those moving averages, that would increase the bullish bias. So, the battle's going on, lots of ups and down price action. The sellers are trying to take control in the dollar versus Canada. We'll see how it all plays out. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.